Hey guys, so welcome to part two of market analysis. Today we're going to go over the macro level of the market analysis for active and passive investors. I'm actually going to do a case study for you on a deal that we looked at probably about 2 years ago. Um, but if you like this content or if you want to hear more about market analysis or anything like that, we have a few more in this series that I'm going to go over, giving you the websites and the tools to do so. But please give me a like, comment, and subscribe, and that way we know that we're giving you the right type of content that you guys want to actually hear. So without further ado, I'm going to share my screen and we're going to go right into it. um, so here's a deal that's in Columbus, Ohio, and pretty much what we're looking to do is we are looking to find population growth, growth, job diversity, unemployment rates, income growth, and crime rates. I have some of these websites right here. I'm also going to put them in the details down below. But I want to show you kind of what it looks like to find this stuff. I've already gone through and found this, but I'm going to show you what I do when I look for this. So we want to start off with population growth, right? So this website, World Population Review, is a great website. You can come over here and you can actually go up here to U.S. cities. You can come down and find your city, right, around all these. And here's Columbus, Ohio, right here. So we're gonna look at this. And here's some of our growth rates, right? So we got 16.12% since 2010. Your 2020 growth rate is 0.85%. 2020 is probably a difficult year to really kind of judge everything on because of COVID. But it's good to see that it's green. This site will rank. They don't make these green or red. Obviously, red is bad. And since they're both green, I'm guessing 0.85% is good for a COVID year, right? And ways you can check on this. So I brought this over to our list, 16.12% since 2010. There's a few other sites you can check on, such as bestplaces.net. You can come over here and look at people stats. You see the population grew from 2000 to now about 19%, which is probably close, like most of it in the last 10 years. 1990 till now about 35%, which is really good. And you can see this compared against the United States. So those are good indicators that this is a growing market. As long as you're beating the US, that's always a good sign, but not always the best. You don't want to just be beating it. This is beating it by a decent amount, right? Columbus is a good growth market. So we look in there, and then you can actually come over here to city data as well to check your numbers, and population change since 2000, 23%. So I mean, like, you get a good range of like, okay, this is definitely a growing area. None of these sites say that they're losing population, and what I mean by that is like you could come over here to the U.S. cities. Let's say you're looking at something like Detroit, right? Everybody knows the story of Detroit with that big auto manufacturing plant leaving there. So right here, they've been just losing, losing, losing. So they've been losing for since 2010 about 7%. Not good. And you can see right here that this is red. So that's not a good 2020 COVID growth rate. You can just kind of see that where this goes. So population growth, huge for determining if people are moving there, and what that does is really drives demand in the market. At this level, we just want to make sure that the city is actually growing, because if the city's growing and jobs are moving there, and different companies are moving there, that's a good sign for us. We want to invest there because other people, bigger companies, are investing there. So now we want to go to job growth. Job growth can be here at the Department of Numbers. We can come over to employment. And pretty much what this looks like from the beginning is, I'll start us from the beginning. So this is what the home page looks like, Department of Numbers. And what you'll do is you'll just come down here to the data sets and tools and hit employment. And you can come over here by city and metro. So this is where you'll look at that Columbus, Ohio, find it in the sea of cities, right? And you'll see these employee surveys. So the CES, I put this note here, is the number of employees on a payroll. So this is reported by employers. The CPS is a household employment survey, which means somebody could be getting paid under the table, right? And so maybe they're not claimed by the employer, but they are getting paid somehow. So they are employed. This is a good way to understand trends and which way things are going. So in November, it looks like they lost 22,000 jobs. In terms of the employee or the employer, looks like they gained about 5,100 jobs. So they lost a good bit with COVID. Been pretty steady from the employer standpoint. Kind of the same numbers over here. It looks like maybe some people who were getting paid on their table or that weren't um, reported by their employer lost a lot more jobs this past month over month in terms of November and October. But this gives you a good idea of like what's going on month over month, doing good. Month over month for this one, not doing good. And for the year, they've lost 71,000 jobs. So again, very difficult to kind of use this information as much because COVID has really put a damper on a lot of like small businesses and stuff. So these could be a lot of small business um, employers, but it's also something to pay attention to because COVID is still going on today and we don't know when it's going to go away. So good to pay attention to. Bestplaces.net also another another good spot for this. You can see recent job growth is about 0.9. For United States is 1.59. So not really keeping up with the U.S. here, but it looks like they're beating it by a percentage point or probably a little bit less. And the future job growth, take that with a grain of salt, right? Not sure which companies are, you never know until they're actually there. So this is a prediction. This is a prediction, but it's just something I guess you can hedge against and see like, okay, U.S. is supposed to do 33%. We're going to do a little bit better than that. So that's at least a decent sign, right? So I'm going to write that over here. Future job growth 34%. This is 0.9% recent. So now we want to look at job diversity. So this is where we can come over here to the economy. And bestplaces.net, we can stay on here for now. And we can look at the population by occupation. So this will give us an idea of what percentage of jobs are held by certain occupations. And, it looks like the biggest one is healthcare and social assistance, education services, accommodation and food. It's a big college town, so that's probably why that's a big makeup of that. Professional and scientific and technical. Retail trade, again, college town, probably a good bit of those jobs available. And then manufacturing. Um, you can see these different industries. Another good one is datausa.io, and you can look in Columbus. This isn't Columbus, so we'll search for Columbus here. Okay, we're going to exit that page. datausa.io. We'll come back, go to Columbus, Ohio. Columbus, Ohio, MSA. So here we are with all of our big stats. They have a lot of good stuff, and they go into politics a little bit here, diversity. But here's your economy, which is what we're really looking for, right? We want to look into what types of industries are here, employment by industry. So year over year growth. This is 2018. So before COVID, but you got healthcare, retail, finance and insurance, manufacturing, professional services, educational services. So it looks like a big chunk is educational and healthcare, which is pretty much lines up. So we can see there's a good bit of different sectors here. Another good thing you can do is go to Glassdoor just by Googling top companies in Columbus, Ohio, and it should bring up this. You can see what type of jobs are there, right? So JP Morgan, 6,000 jobs, Ohio Health, 1.1 thousand jobs, K Force, which is helping, I guess, jobs, let's see, IT services, 4.7K. So you can kind of just go through some of these pages and see Deloitte, big company, 7.7K, IBM, almost 20,000 employees there, Amazon. You want to make sure that there's not too many, like the Starbucks, right? The fast food industry. There's a ton of these in here, and we already know that because there's retail, trade, and food and accommodation. 23,000 jobs at Home Depot. This is just a good way to kind of see like where the jobs are, Target, right? There's a lot of people there. So, especially with COVID, this could be a market that's getting kind of hit by this, right? Not many people can go in person. Cardinal Health, that's a good one. You got Chipotle, you got McDonald's. They're probably still working, but not to the capacity. So there could be some job loss, which is what we saw in our numbers anyway. 6 and 9. So we got good diversity. I put the main things here, but especially with COVID, you want to make sure that you understand, okay, healthcare and social assistance, they're going to be fine. Manufacturing's probably fine. Retail trade could be in, some trouble. Food services could be in trouble. Education should be fine. So now we want to go to unemployment rates. These are just things to take into account too. It's really just understanding what's going on in that market because real estate, it's local. In another city, manufacturing and a whole bunch of other things might be there, and those jobs are all safe, right? Finance, um, any kind of industry like that, you can understand why like COVID probably didn't affect them at all. So the next thing we want to look into is unemployment rates because this is the real tell, right? And here we can come over here to Columbus, Ohio. We'll go to unemployment, which is just this is the Department of Numbers. We're gonna come down. We're gonna find our city, Columbus, Ohio, and we can see the unemployment rate. So looks like month over month, we're moving in the right direction. National, they're coming back a little bit faster than national. Year over year, they've only added 1.6, and national has been doing a lot worse, which can be kind of expected. Unemployed persons, month over month, they so 7,000 people got jobs this year, and 15,000 new people are on unemployment. So looks like they're still waiting probably for these percentages, but you can see in November, 6.7. Ohio's around here. Columbus is doing better than the state. About 54,000 people unemployed. When COVID first happened, there were some big numbers right here, and it's just been slowly, slowly, slowly going down, which is a good sign, right? It means Ohio's recovering pretty well. So, their current unemployment rate is probably around 5.1. You can also take into account uh, this Columbus unemployment rate is 4%. US is around 3.7. This data is probably a little bit older. Department of Numbers is probably what I would go with. So I would say they're around 5.1% because that's November 2020. And this is typically from like a couple of years out. So it's just good to kind of understand it. And then you can always come into city data as well. They sometimes have unemployment on here. Percentage, cost of living, houses. No, this ain't what we want. Anyway, there's normally some unemployment information here in city data as well, and you can also come here. There's unemployment trends in data.usa. Let's see, employment by occupation, employment by industry. Well, maybe not. Maybe it's not in this one anymore. But see, income's growing, so that'll be our next thing, right? Income growth. So let's see what our income growth is. And we can look at that at the Department of Numbers. So again, we'll come down here, look at our data sets and tools, and we'll hit income. We'll come down to our income by metro, look for Columbus. and we'll see the percentages. So it looks like the median household income for Columbus has gone up 3.06%, which is more than Ohio as a whole. But the US as a whole is going up. The 3-year change, Ohio has been behind, or Columbus has been behind all three of them. So they may be starting to top out here in Ohio. And then this is the family income, which I'm guessing would be, married people and other families' total income instead of just household, like roommates. So Columbus, you can see 3-year change has been 10%, which has been very, very good. US as a whole is around $80,000. Ohio as a whole is only 74. So Columbus is beating both of them. Columbus is beating both of them in the family as well. So you can kind of see historical inflation adjusted family income. You can see how Columbus is just climbing very quickly. And they have a per capita, right? So per capita, still beating the US by a little bit. 3-year change, 7%, 5% change. So they're really climbing up for the personal per capita. So this is all good signs of income growth. So we can put 3.6% year over year for the household, family, and then you can put the per capita, which is it looks like it's about 5.35%. And the US is 3.5. So it looks like it's still doing good, even in COVID. They're getting those income growth rates. Um, so that's a good sign. I mean, year over year, household isn't up to US, but the family's beating it and the per capita is beating it. So that's good. And then crime rate is where you'll look here in city data, and they'll normally have a nice little table here for us where you can see the crime trends. And since 2005, you can see that crime has been trending down, which is a very good sign. And then you can see right here in 2018, they have it at 375.4. US average is around 274, so a little bit higher than that, but I wouldn't say it's a super red flag just because I mean it's only 100 more. Could have been anything around here. But that's where I would put a lot of my data. And really, what you're trying to do with this is just compare it to the US as a whole. You want to know if this city is doing better than the rest of the country because that's someplace you probably want to put your money because that's where you have the best chance of appreciating. Most of the business plans and syndications involve income increase, which is rental increase, other income increase. So you need people to be moving there to create the demand. You need jobs to be moving there. You need, job diversity. So if somebody does leave there for some reason, you're not, losing a whole bunch of jobs and the income's lost. You need the unemployment rates to be lower than the US. You need the income growth hopefully to be higher than the US because that means that those people can afford the new rents that you're going to be rent bumping, and you want to make sure that crime is down because people aren't going to move there if there's a lot of crime. But I will put all these websites into the description. Again, if you really liked this, please give me a like, comment, and subscribe. Next week we're going to go over the micro level, which is where I'll go into the zip code. We go into really the tenant profile of who we're going to be targeting, and that's going to give us our business plan. Talk to you next week. Bye-bye.